Hello, and welcome to the video analysis report of RUTH's Hospitality Group. This investment research report is covered under the Birkenroad Reports program at Tulane University's A.B. Freeman School of Business. RUTH's Hospitality Group trades on the NASDAQ exchange under the ticker symbol RUTH. The analysts covering this report are Mason Moore, Harrison Ezrati, Avijita Panwar, Maria Rico, and Helen He. The team of analysts used different valuation metrics to develop a 12-month target price of $20 and an investment rating of market perform. In this presentation, we will be going over the following topics: a brief history of the company, a brief overview of the premium steak industry, and then we will be talking about the recent developments such as RUTH 2.0. We will then discuss our proposed investment thesis and valuation metrics. Chris's Steakhouse was started in 1927, and Ruth's Chris was later established in 1965 by Ruth Fertel in New Orleans, Louisiana. Ruth's Hospitality Group is currently headquartered in Winter Park, Florida. Today there are 67 company-owned restaurants, 59 domestic franchises, and 20 international franchises. In 2015, Ruth's Chris generated total revenues of $268.9 million. This figure includes $253.1 million in company-owned restaurant income and $12.1 million in franchise income. Ruth's Hospitality Group operates in the premium steak industry, a subsector of the fine dining industry. The restaurants offer upscale dinner and alcohol menus and focus on service, food quality, and personalized dining experiences, well known for its premium steak and wine options. The company has three target customer groups: wealthy individuals with incomes of over $100,000, mid-income individuals and families looking to celebrate a special event, and corporate clients taking advantage of Ruth's Chris's upscale catering menus. The company's business is highly seasonal and attracts the majority of its customers during the first and fourth financial quarters due to consumer preferences for restaurant dining during holiday seasons. The $7 billion premium steak industry is highly competitive, one in which Ruth's Hospitality Group has captured 9.2% of the market share. Ruth's competitors include, but are not limited to, Darden restaurants, including the Capitol Grill, Morton's Steakhouse, Del Frisco's, and Bloomin' Brands chains. Competition ranges from large chain restaurants to small private restaurants. In January 2016, Ruth's Hospitality Group launched RUTH 2.0, a marketing and operational initiative to evolve its menu, infrastructure, and design elements. RUTH 2.0 focuses on three key areas: restaurant location remodeling, menu restructuring, and increasing traffic. Revamping Ruth's Chris may prove to be very profitable in the future with the approaching millennial generation of customers. So far, the company has remodeled 2 Ruth's Chris locations and plans to remodel a total of 7 locations by the end of 2016. We've seen Ruth's stock price fall to $6 in January of 2012, and as you can see, the stock price has risen over the last 5 years to reach $18.48 as of March 29, 2016. Overall, Ruth's stock price has some seasonal fluctuation, but has attained steady growth over the last 5 years. Ruth's current stock price is near an all-time high, and our analysis suggests the stock price will keep rising as the business continues to grow. Moving on to our investment thesis, we believe Ruth's Chris possesses a strong level of pricing power over its customers. The company is in a unique position because a decline in the economy will not necessarily decrease product demand. We expect the company's pricing power to continue to sustain or increase profitability. In January of 2016, Ruth's Chris started to implement RUTH 2.0, an initiative that consists of expanding the menu and renovating the restaurants to smoothly transition with the 21st century restaurant industry. We believe this initiative will attract millennial customers and will provide the company with a sustainable growth rate. Ruth's Chris's revenue is strongly correlated with its total number of restaurants, both franchisee-owned and company-owned. The company expects to open between 6 to 10 new restaurants every year. We believe this growth strategy and the company's thriving continuous operations will drive restaurant growth. The company seeks to return excess capital to its shareholders by paying dividends, repaying debt, and repurchasing shares, which we think will drive shareholder returns. Lastly, we find that the franchise program reduces risk and generates more revenue. Current franchisees have already agreed to open 17 new restaurants, 6 of which are expected to open by the end of 2017. On average, each franchise restaurant contributes $200,000 in annual revenue, so we believe the opening of new franchises will positively contribute to the company's revenue. We performed 3 different valuation methods that generated a target price at around $20. The 3 methods we used were a dividend discount model using the discounted cash flow method, a price to earnings multiple, and a price to cash flow per share multiple. Each of the methods yielded a similar target share price of $20. The company trades at a price to earnings ratio of about 20 times earnings and 13 times cash flow, along with many of the company's peers. In our projections, we have stayed in line with these metrics to forecast the forward target price. In addition to the multiples valuations used, we valued the company based on the dividends investors will receive, with a modest growth rate applied based on historical increases. We hope you enjoyed our presentation. We have given RUTH a rating of market perform, and we wish the company well for the upcoming fiscal year.